Kate, do you have another speaker for me?
Yeah, we've got Doc Severson in the room.
Hey, Doc, can you hear me?
Absolutely, I can, and there's no delay here.
Just the mental delay on my part. So how things on the East Coast out there? Are you having a good summer?
Oh, fantastic, fantastic, John. We're in the foothills of the Blue Ridge Mountains, so it's a beautiful time of year.
Isn't that a great place for making moonshine?
I wouldn't know. I
Oh,
wouldn't know.
you wouldn't know. Yeah, they
no, there's in this area, there's probably one brew pub for every member of the population. So we got plenty of places for libations around here besides.
Yeah, you're not wanting for choices, are you?
No.
Okay, well, let me give you your introduction. Doc Severson has been actively trading the stocks, futures, options, and cryptocurrency market since the mid-1990s. And his specialty is finding edge with the same basic chart analysis techniques he outlines in his latest Amazon book, Fractal Energy Trading, 4 Simple Rules to Profit in Any Market, Any Time Frame. He has taught these principles to thousands attending his online webinars, live seminars, and trading courses, and has become the go-to source for understanding how to find opportunities through multiple time frame price-based charting techniques. His companion book, Hacking the Holy Grail, The Trader's Guide to Cracking the Code of Profitability, addresses the myriad mental roadblocks that come with making decisions in the face of risk, and is a stumbling block to traders of all shapes and account sizes until they find that the trader's holy grail is not the magic trading strategy they're looking for. The holy grail of trading is actually between their ears. Who knew? Doc has been helping students in all countries and backgrounds simplify their approach to markets since 2005, and his current platform at ReadySet.trade, where he conducts a live trading room to help retail traders build a system to create consistent income opportunities targeting profits of $100 a day. Okay, Doc, you have until 5 minutes before the hour, and then we'll give our latest batch of prizes for the week, and I will be sitting here listening, so I'll mute myself and you have the floor.
Okay, John, I'm assuming that the screen is showing?
Yeah, 0-day options trading strategies.
Okay, great. I will be on the runway in 55 minutes.
You are
Thanks,
cleared
John.
for takeoff.
All right. Let's rotate here. Okay, so who am I? So some of you may know who I am. Again, my name is Doc Severson. ReadySetTrade and ReadySetCrypto.com are my current services. I have been around for a while. I've been doing this in this space since 2005. I've been member of Options MD, TheoTrade, Doc's Trading Tools, the options linebacker once upon a time. And my specialties, as John said, fractal, multiple time frame price analysis, options and futures strategy. And because of my own liabilities, I've had to become an expert in trading mindset. And ultimately, what I'm trying to do is use my engineering background to simplify the complex. There's a lot of complex stuff going on out there. My preference is to make it as simple as possible. As John mentioned, I have written a couple of books that are available on Amazon. So first of all, Hacking the Holy Grail is about achieving and attaining that trading mindset. And then Fractal Energy Trading is about my multiple time frame trading system that I use with everything that I do. Okay, so that's who I am. What I'm here for today is because so many people are discovering markets these days, but unfortunately, these are very perilous markets. This is not the time for most people to be discovering and learning at the edge of the blade, so to speak. And I want to see the little guy win without getting stepped on. I don't want to see them being taken advantage of, and without thinking that they have to join the herd or follow some wild subreddit to win trades. That's usually goes against what actually works in the markets. With today's market environment, with us being in the bear right now, I think there's no question about that. I think there's also something very compelling about being flat by the end of the day with zero overnight risk in today's environment. So that's mostly what I'm going to be talking about today. The zero-day option strategies are one of the best natural edges that I've seen available to retail traders in a long time. So my purpose today is to make you aware of them, show you some setups, and in general, help you decide if this is something for you. Okay, ready, set, let's get moving here. So why we're here today is everybody's trying to set themselves up for financial freedom, but using yesterday's methods won't work anymore. I've seen these things die over the last 10 years. Now, what are yesterday's methods? Well, everybody's trying to grow the pile. This is the old paradigm. Continue to build up your pile of assets, and then you can live off the interest. So the old standard was you build up $1 million and then you can live off 5% APR and earn $50K a year just off the interest alone. And most people would be okay with that. So once you accumulated enough assets, you could live off the interest. The problem is, can't do it today. Interest rates are starting to creep up higher, and chances are pretty good we're going to get at least a 75 basis point rate hike tomorrow, but still well below the pace of inflation. And that's the one thing the market's going to be looking for tomorrow, is whether the Fed has gotten the message or not. So interest rates are still way below inflation rates. So it doesn't matter what they're going, you're not going to earn any kind of reasonable income from interest. And we all know the reason why. We're not here to pass judgment. It's just today's reality. So the current alternatives to getting interest are you can get annuities, but they lock you in for years to receive a small, tiny rate. Bond yields are correlated to the interest rates, but still 3% a year. Really? Is that what you're going to retire on? And stock dividends can be upwards of 7%, but you got to pay for it, right? So you see some of the bigger stock dividends are with stocks with charts that are moving down into the lower right. So to me, the usual alternatives to creating income are terrible in today's market. They just don't work anymore. So what are we going to do? This means that most are not prepared for this new reality. You can follow the old paradigm of growing your pile of assets, but being able to make money on your money using the old methods is no longer there and has not been there for quite a while. So what's going to happen is all these retirees are going to be shredding through their principal in no time and wondering what changed, even though this has been happening over the past 2 decades. And to paraphrase the immortal Private Hudson, what do we do now, man? Game over. So I would say no. So if we're going to use the old paradigm, it is game over, but it's not, because what we're going to do is we're going to learn to make income. Income is to the rescue. Income can be defined through either passive income, which is basically earned without active participation. We don't have to do anything really. We're making money on our money. So that's either through interest or dividends in the old school, or active income requires participation and effort to earn income, which is either a job or active trading. So we can use income to the rescue. Now, can we do this with stocks? Well, I'd say after a 13-year run, stocks are shedding their excesses and the market's going bare. It's going to be difficult right now. Stocks are trending lower and they're going to be doing so for a while until we finally hit capitulation. I think chances are pretty good that we're going to have a second phase. You know, whatever we bottom out here, we're going to set up what Simon talked about as a massive lower high, and we may get the second phase of the bear coming along sometime later this summer, and will be worse than the first phase. That's usually how they occur. The worst selling occurs at the very bottom of a bear after everybody gets complacent into the summer, I believe is what's going to happen. So right now, stocks are trending lower. We're down 22.5% on the year, likely entering timing-consuming bear market. It's difficult to earn income while holding a depreciating asset. So we can maybe trade the market leaders, but either Apple or Tesla, both of these are down even more than the S&P. So how can you create income trading in and out of them unless you're net short? So trading just stocks alone are going to be difficult. And of course, there's that wonderful pattern day trader rule that the SEC does not give any respect to you if you have less than 25K in capital. and they're going to make it really, really difficult. Being tagged as a PDT or pattern day trader is effectively ending any kind of active trading that you're going to do. So if you've never had that happen to you, if you've never had the joy of being tagged as a PDT, trust me, you don't want that to happen. So stocks for income, I would say no, not for income. So we can trade options though. Passive income, we can sell longer term options to act like an insurance company. Hopefully you've heard of that model, where we're selling the risk premium to buyers. And active income, we can create by looking for short-term opportunities to either buy or sell options using the leverage of options to more efficiently use that capital. So using options allows us to replace our interest income from the old paradigm. So here's our answer for it. Of course, there's a cost to this though, that's the knowledge, right? My assumption for today is that since this is a John Thomas webinar, this is advanced trading, I'm going to skip the usual background on options. I hope that you understand options to at least a certain degree. And if you don't, you need to, because that's the name of the game today. So for the rest of this presentation, I'm going to be focused on this point here. How do we generate active income using 0 days to expiration option strategies? I will explain that in the next bubble here. So our goal, before we go any further, is to earn $100 a day in income. Now, why $100 a day? Well, we got to start somewhere. It doesn't sound like much of a goal, maybe to some of you, especially with vendors screaming about crushing trades and making thousands a day in their trading room. But you've got to start somewhere, even if it's $100 a day, or maybe even if it's $10 a day. There's so many people I've talked to in the past that say, look, Doc, I don't care, man. If I could just learn to be consistent, because it's like Sisyphus rolling the stone up the hill, right? They get it up so far and then the stone rolls down the hill again. You can maybe earn 4 days out of 5, and then you have a big loser and you roll it down all the way over again. So focusing on tiny, consistent gains adds up. If you were to say, if I were to challenge you and say, could you get better at your trading strategy between today and tomorrow? Could you get 1% better? I think most of you listening today would say, well, sure, Doc, I could do that. I can get 1% better. I can apply myself and get 1% better between today and tomorrow with my trading strategy. Okay, great start. Now, the next day I come along and I say, okay, good job on getting that 1% better. Now we're going to do the same thing again. I'm going to challenge you to get 1% better again. If you follow this type of strategy, getting these tiny incremental gains, at the end of a year, do you realize you'd be about 38% better at what you're doing? 1% better at every day, extraordinary progress after a year. So that's actually 3,700% better, right? Because of the way that you get compounding, which is, as Einstein said, one of the natural wonders of the world. So what we're going to do is we're going to pick one thing, start with a modest goal, and continue to improve on it every single day. And here's what I love. Trading 0 DTE options allows us to get lots of trades and potential improvement over the span of a year. We get a lot of practice at it. Just like golfers hitting the range, you get a lot of practice. Just like athlete, just a batting cage, you can get lots of practice at it. Now we use what's called the income pyramid. So we can split this up through active and passive income. So typically we're using passive income strategies down here. Maybe we're setting up longer term Iron Condors, or perhaps even selling puts on stocks that we want to own down the road, creating that long-term, really slow type of income. And then we get into directional options. And this is where we're going to focus on today. We're going to use less capital for that than some of these bigger, stodgier strategies down here, which form the foundation of our pyramid. And then if we really want to use the leverage, we'll use futures for more directional trades, but that's not today's topic. So this is how we sort of set up our strategy approach between everything. We use a blended approach. Now, your approach will be somewhat different. Everybody listening today will be somewhat different because everybody has a different level of capital. Everybody has a different level of knowledge. Everybody has a different level of time available towards getting to your goal. And it's the intersection of your capital, knowledge, and time. This Venn diagram here is what we're after. Everybody's going to be this different with that. Everybody has a different level of capital, knowledge, and time. But ultimately, these are the three that we need to bring together. You need to determine how much time you have. Knowledge is something which is not fixed. It's current state today, but your future state is where we're going to focus on. And whatever capital that you have, we can adjust to whatever you want to accomplish, right? So capital, knowledge, and time, and the intersection of those three. So of course, it's easier with larger accounts. You can just sell a pant load of puts and create a lot of passive income. But I'm assuming not everybody has got that luxury, or maybe it's just kind of dangerous in today's market to do that. So what we'll focus on today is active income using 0 DTE options, which we'll define in a minute here. We'll place these and remove them in the same day. We're not going to hold anything overnight. And if we only do them 3 times a week, we can avoid that small account pattern day trader account lockdown issues with that. So active income, we're flat at the end of the day. Very, very important. So that's our goal. Earn some kind of consistent level of income a day, whether it's $10, $100, or maybe even $1,000 for you. And we're going to use 0 DTE options for those. So 0 DTE, or days to expiration, are those that expire today. Now, you're used to hearing weekly options. Here's one with standard weekly options pattern. This is Microsoft. Here's Microsoft, here's Friday, and then here's next Friday, and then here's the Friday after that. All of these options are Friday expiry. Even the monthlies are expiring on Friday. So this is the standard, and this is how weeklies came out. I believe it was 2005, 2006, sometime in that area. Okay, so that was a big thing. But only once a week did you get that option that was going to expire that day. But the S&P 500, and especially after last month, this was a big game changer. Now we have options every single day. And oh, by the way, I believe it's probably not too long before we have intraday options as well too, if these things really take off. So look at this. This week alone, we got Tuesday, Wednesday, Thursday, and Friday. This is the AM settled monthly. We're not going to look at that one. That's the old school way of trading. Monday, Tuesday, Wednesday, Thursday, Friday for next week. So we have 5 options now. This is a big deal. When I was doing these presentations last year, I was only talking about 3. Now we have 5 as of the month of May. Now there's also the spiders and Qs. And of course, there's the NDX, which I'm not going to talk about the NDX because their options are kind of a liquid. They're really wide spreads. Don't like them as much. So we can really focus on the S&P 500 here. Or if you want to, you can trade the Qs. The Qs also have 3 times a week these 0 DTE options. So for now, we have the spiders Monday, Wednesday, and Friday. But I would say we'll probably see additional Tuesday and Thursday SPY options before too long, especially if there's this much trading activity. I think they're kind of taking a look at the SPX to see how popular that is. And if they take off, if there's a way for that exchange to make money, they'll make it happen. Now, the great thing about these is these options expire today. So the option value, the extrinsic value of that will go to 0 by expiry, which is at roughly, 4 o'clock Eastern time. So it evaporates by the closing bell. So we all know that. It's the proverbial, you're holding an ice cube in your palm of your hand, and it's you're walking towards this blazing fire over here. I'll try to draw a fire. That's a fire, okay? So the closer that you walk to the fire, the amount of melting is going to be a result of the square of the distance to it. So the closer you get, the more it's going to melt. And this is what happens with expiration on these days. So these are very sharp instruments. And the analogy that I use for people is, if you're like me, like when I was growing up, we'd go to these things called batting cages. and you'd hit against a fast pitch baseball. And they had different batting cages. They had maybe a 40-mile-an-hour fastball, a 60-mile-an-hour, and then it would top out at maybe something like 80 or 85 miles an hour. Don't go in the 85-mile-an-hour batting cage first. You're going to be swinging and missing and whiffing all over the place, right? Get some skill at 40 miles an hour. Learn to hit contact at 40 miles an hour, and then work your way up to 60, and eventually work your way up to 85. So a lot of people that have never traded options before will listen to something like this and say, I want to start with this right now. And I would say, slow down, learn to work with something that takes a little bit longer, learn how to manage these positions, learn how time decay works, learn how to trade those options first with something a bit slower that moves in slow motion, right? Everything is moving fast these days. So you don't want to amplify that with 0 DTE options. So slow down, work your way up to the speed of this. Work your way from single A to double A to triple A to the major leagues, because you're up against the major leagues every day when you're trading the SPX. So those are what 0 DTE options are. Now, how are we going to trade them? Well, obviously we can go directional if we want to, right? We're seeing more trend days than ever in this bear market versus range days. Let me define what these are. So a trend day is something where you're going to get on the daily chart a big candle, and it's going to move in one direction or another, where you're seeing a great deal of price movement in one direction. It's a freight train move during that day. These are especially prevalent during bear markets. If you go back and look during the bull from the bottom of 2020 up until the very top in 21, we had a lot of little days like this that were little doji days where it just didn't do much of anything. Maybe a little bit of small body, a lot of days like that where it just didn't do much of anything. It was just a slow, persistent, daily Groundhog Day move every day. And now we're got the complete polar opposite of that. We're getting a big move every single day, one direction or another. So we're getting a lot of these trend days coming along. Now, these options are going to be extremely responsive because of, I don't want to bore you with all the Greeks, but because of gamma and how gamma makes the delta accelerate it's a second derivative of that. So it moves in your favor. It's going to really flash the delta and make things move very, very quickly, both for and against your position. Now, could we do long options with this? Could we just buy puts and calls and go directionally that way? Well, you can, but if we're going to do these 5 days a week, we're going to be restricted to the SPX, and these are going to be kind of expensive. I mean, if you look at these this morning, okay, if you want to buy these, that's, $2,200 to $2,400 at the money. Of course, we know not to do these out of the money because the time decay is so quick. So you want to do these at or in the money if you were going to do something directionally like that. But even these, these are expensive options. You're risking a lot, even if you have a stop on something like this. So to me, using long options is probably not the way we want to go. We want to use vertical spreads. If we use, say, for example, like a $5 spread, and if we play this right at the money, we're going to seek potentially a 250 reward for 250 risk. Now, typically we'll take something smaller than that. We won't get too greedy on the move because a lot of times the moves will reverse intraday. So just when you're about to get a $200 reward, all of a sudden it reverses and you get a 250 loss. It's tough to do something like that. So we usually don't, we usually nibble at getting profits. We're taking something a little less than the 250 reward, and we're taking less risk than 250. If it's wrong, we'll just get out of it. And you can, of course, go to the spiders if you want to have something with, 1/10 the notional risk of this. But typically we're still doing like maybe $2 wide spreads on the spiders, which is going to be looking for $100 credit and $100 risk. So we're still using something on that. Okay, so we're going to be using vertical spreads. Now, judging trend days, here's a couple of different trend versus range days. Notice the range day, first of all. A range day, this is the opening range. This is the first 30 minutes. Now, we're going to spend a little bit more time talking about this in a minute, but that's the first 30. is the opening range. We'll do this down here. That's the opening range, and then the opening range gets extended out into the rest of the trading day. Notice in this case, the range was set up and the price just stayed trading within this range, which is ideal for something range-bound, a range-bound strategy, which we'll talk about in a minute. But we're talking about trend days here. Here was an example on May 26th. We had a couple of days in a row like this where we just had this freight train. We had these massive market internals that were super bullish, and we just looked for a simple entry onto this one. It just kept on going. It was a freight train day. This is a trend day, and this is what we want to use vertical spreads for on identifying trend days. And I'll show you how we're going to do this in just a minute when we go over it using the opening range and the expected move for the day. So those are the directional options. We're just going to use a very simple vertical spread. One option short, one option long, very simple to manage. And the best part about it is you define your risk right on the entry to the trade. Okay, so that's directional. Now we're going to add a little bit more complexity to this. We're going to go into our non-directional strategies. And to me, one of the best ones of those that we can use is what's called an Iron Condor. Now, as soon as I say Iron Condor, a lot of people are going to go, whoa, wait a minute, that's different than how I trade them. Well, there's different types of irons, and I want to define these for you. So high probability is typically what most retail traders will start with because we like having positions a mile out of the money, right? So the analogy here would be that if there's a battlefront 5 miles in front of you, you're playing the artillery. You're way behind. You're in the rear echelon, let's put it that way. And you're just lobbing shells way beyond the battle lines into the enemy, which is 10 miles distant. So you're entirely safe back there. You're out of harm's way until the enemy flanks you. And then all of a sudden you have no support units around you. So this is why a lot of retail traders start off with a high probability, but usually what happens is after a while, after they get more experience, they start working towards some of the lower probability strategies, even though it sounds counterintuitive. Now, a low probability has only got a 50% probability of success, closer to the price, but more return and more faster. Let's put it that way. It's a much quicker trade. There's also some other ones that you've heard if you've listened to any of the Tastyworks guys. They always talk about setting up trades at one expected move. And so we can do them based on a statistical distance, which is a 68% probability of success. And then also there's the Iron Butterfly, which we'll talk about more in a minute. This is the most narrow Iron Condor, and it's my favorite one because it's so fast. That's the thing, is the more narrow you get, the more speed that you've got with these trades. You can get in, get your fair share, and get out while everybody else is hanging around in the trade all day long, waiting for the options to decay. I'm already in, got my fair share, and get out. So those are different types of irons. I'm going to go quickly through these to explain these. So high probability will probably be the first type of Iron Condor that you trade. Positions are way out of the money, right? So they're unlikely to get attacked. So a lot of times these positions will be maybe a 5 to 10 delta, which corresponds to a 5 to 10% probability that the price will make that option in the money that by the end of the closing bell. So it's got poor reward to risk. You can see let's talk about this for a second. So here's the reward and the risk is down here on both sides, unfortunately. So here's the risk that's a much bigger risk than your reward. And it goes on both sides. So you're equally miserable no matter which way the price moves, right? So time decay is also slow due to the distance. They don't move very quickly. So many like to use these intraday. They like to leg into them. Like if they see the price moving around, maybe they'll sell up to the call spreads first and then wait for a pullback, and then they'll set up the put spreads. So again, this is the high probability Iron Condor. I don't do these anymore. Now let's talk about the opposite, which is the low probability. So notice that now we have a 50-50. So this is a 1-to-1. This is 50-50-50 here. 50% probability of success right out of the gate. It's a 1-to-1 reward to risk trade. So you might look at this and say, well, this is terrible. Why would I trade something like this? Because it's a lot more narrow. That's true, but it's a lot faster for you to earn your fair share, to get your profits, whatever your profit target is, to get in and get out. You don't have to stay all day in a trade like this. Or if you've got a longer term trade, you don't have to stay the entire month. Let's put it that way. It's much better reward to risk initially. So with a trade like this, I may not use a stop because I've got my risk set already. I can go travel and I don't worry about it because I know exactly what my risk is. Much faster time decay. So there's all kinds of really subtle advantages towards doing something like this that you don't necessarily notice the first time through. And then, of course, the expected move Iron Condor, and we talked about this. It's got a 68.2 probability of success. And identifying the 1 sigma is usually, we're going to look for roughly about it's supposed to be about a 16 delta is what 1 expected move is. But what you can do is also look at the expected move in the option chain, and you know essentially how far away those options need to be. So that's how far out 1 expected move is. And here's the Iron Butterfly. A lot of people don't know much about the Iron Butterfly. It's my favorite version of the Iron Condor right now, just because of the way the price is moving. This version creates profits much faster than other versions of the Iron Condor. I don't want to make trading into a job. I already had a job. I already had a whole career locked in an office, sitting on conference calls all day long. You're sitting there watching the clock. How long is this going to take? And by the end of the day, you're exhausted. So in my mind, what I'd like to do is I'd like to identify a very precise entry point. And if it shows everything that I'm looking for, I'll pull the trigger. And generally, I'm out of this trade in about half an hour, maybe an hour or so. But that's much better than sitting around watching this thing for 6.5 hours on the edge of my seat, wondering if I'm going to win or lose. I know pretty quickly whether or not it's going to be a good day or not. So that's my preference. Everybody has to kind of find something that is their speed, though. And this is my speed. So which one is best? There is no best. There's the only one that works for you. So again, high probability condors are great for people that can't watch the market. So if you've got a JOB, or if you're travel during the day, things like this might be the way to do it because you don't have to be watching it. You know where the risk is. The problem is though, you're going to have to take active stops. You cannot allow yourself to take it in the shorts with a full loss on these trades. The risk reward is just too bad. You're going to eat up the profits from 8 or 9 profitable trades and 1 loser. On the other hand, you can go to the low probability condors, the tightest range with the exception of the Iron Butterfly, but faster to profit. Short options are closer to the money and they will erode faster because there's more premium in there. So it's a good compromise. Since the width is good, it's reasonably fast. It's a compromise trade, as is the expected move Condor. Another compromise. To me, it takes about 3 hours to earn $100 on 1 contract of the SPX. So if that's a good time frame for you, if 3 hours is good enough for you, it's not that much drama towards the trade. I can actively manage risk if I want to, or if I really wanted to, I could allow myself to take the maximum risk of, with a $5 wide spread, about 330 for the trade. So Iron Butterflies are the fastest version. You must actively manage them. You can't let them go to expiration and take a full loss because it's, it's pretty serious. So I'm looking to make anywhere from $50 to $100 per contract on these, depending on what's happening with the volatility. And again, it takes me about maybe 30 to 60 minutes. I've seen these in as little as 7 minutes fire, sometimes as much as 3 hours, but generally very, very fast. I think the average time in these trades is closer to half an hour. So that's which one is best, and exits and management here. Anybody can enter an Iron Condor trade. This is what most people do. They enter, the skill comes in knowing when to enter, and then of course, when and how to exit. A great offense is your best defense. Avoiding trend days is key. So I'll show you in a minute how to avoid a trend day as best you can. So never let a profitable trade turn into a loser if you can. I try for $100 a day with every, or $100 a day per contract with every trade, but we'll ask for less during volatile times if it's moving a lot. Okay. So don't forget, there's more, you've got up to 5 opportunities per week with these trades. So you don't have to, if you take a loss on one, there's always the rest of the week. And that's the great thing about this, is unlike the monthly trades where it's like, oh man, I lost my month. The whole month is gone. Now you can fight back tomorrow, the day after that, the day after that. So I love these 0 DTE Iron Condors. They're easy to manage. They're easy to set up, relatively easy to understand to get going with these. Now I'm going to go a little bit more complex with the calendar spread. The calendar spreads are faster than Iron Condors. So again, if speed is your thing, the calendar spread is definitely the way to go. However, there's a little bit more that you got to know. They've got their own pre-trade requirements. It will make you a better trader because you have to think in more dimensions. So I'm going to go through this very quickly here. I'm not going to do a deep dive into calendars, but it's called a time spread. You're selling the front option, and that's closest in, and that, of course, in our case, that's a 0-day option. And then you're going to be buying a back option, which is normally about a week further out in time. This is why they call it a time spread. And this is, if we do this in the shape of a calendar where they're both in the same strike price, this is what it looks like. It looks like kind of a tent here. And because we're selling these right at the money, they have the most extrinsic value, therefore the most rapid time decay. So what's the edge here? The edge is the same kind of thing. Remember when we talked about that, the fire and the option, and here's that 0-day option. Well, that option's decaying like crazy, but the one that we bought, which has still got 6 days left to trade, doesn't decay all that much. And so the differential between the two, what we want is that back option to hold its value and that front option to decay down to dust. So that extrinsic value will decay into nothing. So this is one thing I like about this. This is a fundamental edge. This is not something that works in 2022 and then the market makes a change in 2023 and it doesn't work anymore. I don't know if you guys have noticed that before, but there's some strategies that were super popular a couple of years ago and have just sort of fallen by the wayside now because nobody can get them to work. You have to take care to keep the edge though. This is not a simple trade. It requires a little bit more from you. Actually, it is a simple trade, but because of the fact that it is so simple, people get sloppy with it. So the problem here is that there are some risks, like trend days are not kind to a trade like this because you can very quickly get outside the envelope and you can see how quickly you slide down the P&L curve, which is pretty dramatic. There's also what we call shrinkage. So shrinkage is a bad thing because what can happen is all of a sudden the P&L envelope of this can actually drop and shrink. So you think that, like you're doing really well on this, but all of a sudden you get a big move and the volatility shrinks in the back option, and all of a sudden you're way down on the P&L. So you're managing things on more than one dimension. So people are not quite used to this that are used to vertical spreads, because in a vertical spread, the expiration envelope does not change. This one, it does. So you have to adjust for trends. And the one thing I do like about the calendar is that I can take a single calendar, turn it into a double calendar. Now, I can even turn it into a triple if I wanted to. However, it doesn't necessarily, it's not a panacea, right? It's not a silver bullet. Just because I turn it into a double, I have more room, but I've used double the capital. And it's also going to take probably at least twice as long for those options to decay now because they're out of the money and they're not decaying as quickly. It slows everything down and it costs more. So what I have to do is, with a calendar spread, it turns into kind of like a big accounting problem because you have to keep track of all the numbers that you go through. And this is why I've built a very specific spreadsheet to basically run this thing for me. And eventually what I'll do is I'll automate this so that it's running on some kind of Python program and it will just do all the trading for me with this. So, but you've got to have some type of tracking sheet just like this. Okay, Condors versus calendars, which one is better? Iron Condors are easier to qualify, can create more distance to create a hands-off trade, but the payoff is slower. Calendars and time spreads, much more rigid qualification, a little bit more technically difficult, less distance for the price movement, but much faster. Calendars are also better for quiet markets that show the potential to transition to more volatility. So quiet markets moving to volatile is where a calendar can do quite well. Okay, moving on. How do we chart? What kind of studies do we use? Things like that. So what technical charting tools do we need to help us with zero DTE trades? Now, this is where the religion comes in, because I'm very adamant about this. Been involved with a lot of things. I've looked at a lot of different studies and a lot of different systems. But to me, can we use studies? These are trailing studies like a MACD or a RSI or something like that. Not in your life. There's no lagging study that I'm aware of that will help you anticipate or forecast intraday price action potential for zero DTEs. We need to learn to use the price to frame in the battlefield. Price gaps can be very important with this. The S&P will gap up or down every single day. So as it gaps, track what yesterday's closing price was and whether the price is interested in filling in the gap in the first hour. If it's not interested in filling in the gap in the first hour, you may have a gap and go, and it may turn into a trend day. So that's a clue for you. There's also the opening range, which we talked about before. The opening range is the first 30 minutes, and then everything after that is carried forward. So we're going to track the opening range of the first 30 minutes using the S&P futures and use that reference to evaluate whether we have a trend day or a range day. So here's an example. Here is a trend day. That was a couple of weeks ago. Downside, gets into the opening range and then doesn't spend much time there at all because it just keeps on moving. That's a perfect trend day, just a freight train. And here's a range day. It sets up the opening range and then it stays within there for a long period of time. So there's different strategies for whether we're trading range or trend. It's quite simple, actually. That's the opening range. And then we're also going to use the expected move. Every day, we're going to come in and calculate the plus and minus expected move based on the opening print of the S&P. We're going to go plus and minus that expected move. This is the option. This is the option chain telling us what it thinks based on the supply and demand of all the options that are there as to what is the 68.2% probability of one standard deviation of price movement, plus and minus. And we see the price react all the time at these expected move envelopes. So we're going to track the opening range, the plus and minus expected move. That's all we need to do to determine our technicals for setting up zero DTE trades. Whether it's a range day or a trend day, that's all we need. So I'd say use the KISS principle here. Keep it simple, stupid, right? You can't predict the future. Do the best job you can to avoid being trucked by a trend day if you're selling options, or conversely, you can leverage the volatility of a trend day with directional trades, but you can't win from the sidelines. And you'll definitely lose if you wait for everything to feel good. Keep it simple. Remember, these trades show up 5 times a week. So if you get knocked down, get back up and get in the fight, and the odds will favor you winning. Okay, so that's charting. Now let's get into some examples here. I'll go through these very quickly and then wrap up here in the next 10, 12 minutes. So here's a calendar spread. We haven't been doing a whole lot of these calendar spreads lately because of the volatility of the market. But here's one that came in at 10.19. We entered at 10.19. I'm sorry, at 10.12. We entered, and 7 minutes later, we're out with $125 profit, 27.7% return on risk. It's a very, very fast trade. This is a little bit faster than normal, but still 7 minutes is my kind of speed. Here's an expected move Iron Condor. We entered this one at 10:18 and at 11:36, which is a little over an hour and a bit later. we were out with $50 of profit. So not a huge trade, but it was stayed nicely within here. And it took 78 minutes and we got 15% return on risk for the trade. Again, simple trade, plenty of room to work with and no real drama to it. Very nice. Here's a low probability condor that we did. This one took about 107 minutes, so a little less than 2 hours to score our profits, which in this case was $50, 20% return on risk. Again, very simple and, quite a bit of room in here for the price to move around. Now, directional spreads, here is one that we did. Here is one where the market was showing going up through the opening range, getting beyond the upper expected move, which is this blue line here, breaking above here, retesting the opening range from above. That's our entry point. And we were in this one. It took about 55 minutes for this to score $55 per contract or 0.28 R on this trade. So nice trade, nice freight train day. Could have maybe even made more of this, but we usually take these off at a set target. That's a directional credit spread. Very, very simple trade and very, very easy read on that day. Here's an Iron Butterfly that we did recently, June 9th. And this was risking about $400 per contract, or in this case with 2 contracts, $800. Whole time was 78 minutes, which is a little bit longer than normal because we had a bit more movement, but it never hit our stop loss on the trade. So we stayed in it and eventually paid off for this $200, 25% return on risk or 0.25 R on the trade. So nice, easy trade and a nice range bound day. So just a quick word on performance. So for the past 2 years, you can see that we've done a lot of trades on here, especially with the Iron Butterfly. 108 trades were winners out of 111. So we had kind of an outrageous win rate last year. This year, we've started off 46 out of 51, but we've actually had a better profit factor because we've hung in there a little bit better for the winners. So you can kind of see what's going on here. If you don't know what profit factor means, it means for every dollar that we lose on a losing trade, we're winning $12 on the winning trades. So when you compare the gross wins versus the gross losses, that's the type of profit factor that I want to be looking at. So that's our performance in the Iron Butterflies. Okay, so those are recent examples. Let's put it all together. And then I'll show you what we got going on here and take your questions. So remember, if you're going to grow your pile, focus on creating income today using passive and active income. So use options. Options offer you limited risk, high probability trading strategies requiring far less capital, better risk control than stocks. The cost to you is going to be knowledge. Look for something like $100 a day. Don't try to climb the mountain of financial independence all at once. A lot of people start up like, I want to earn $10,000 a day and I want to retire in a month, right? Learn the way to get there, just one step at a time. Learn about 0-day options. They have a 6.5-hour lifespan. They're available 5 times a week now on the SPX. Learn about Iron Condors. Find the style of Iron Condor that meets your requirements. Master the application of it through entry, defense, and exit techniques. Or learn about calendar spreads if you're also looking for something non-directional. Best for low volatility markets, not quite what we're seeing right now. And then trade small to begin with. The SPY or Qs offers 3 times a week opportunities at 1/10 the capital. No matter how large your account, this is where you should start. Repetition is the mother of skill. Okay, so we put it all together and let's summarize here. Where do you go from this point? It's my belief that everybody needs to shift to an income-based focus, ditch the old financial income paradigm that no longer works. How do you get started? Well, join our community. ReadySet.trade is a community of traders that seeks high probability, lowest trades, seeking to earn $100 a day. We provide the structure and guidance to show how to quickly come up to speed on these 0 DTE strategies. We look at them every single day, plus all the other intangibles that are necessary for success. Goals are for people who care about winning once. Systems are for people who care about winning repeatedly, and I hope that's what you are. So at ReadySet.trade, we run a live daily trading room. We do a 5 times a week daily newsletter. We have a live online community. You can ask other people, say, hey, what should I do here? Live trade notifications and adjustments. So anytime that I do anything at all with any trade that we have, I'm sending it out to the entire room. You can see an example of those right over here. We also have multiple trading courses and strategies and techniques. We're just not a one-trick pony. We do a lot of other things as well as the zero DTE. Plus any strategy briefs and research notes, pretty much all you need to get started making an income with the market. So what we have here is we have a course for the zero DTE, which is unique to everything else. If you go to ReadySetTrade.mat or /mad, you can see the course that we have here. We have a special going on, which is only $99.99 for the course. That gets you lifetime access to the course. Okay, so if you get it today, make sure don't use an iPhone, if you please, because we don't have an access. You can't buy it if you come in through an iPhone. So use a workstation or some other, but it's $99.99 one-time payment. Street price is $199. So you can get a session discount of 50% by acting today. Our overall performance at ReadySet.trade, what we're doing for the last couple of years, since the service inception in February 2020, great time to start it, right? Is 81.05% win rate on all strategies, and our profit factor for all strategies is 2.38, which means that for every dollar we potentially lose, we're making $2.38. You can take that to the bank all day long. Okay, so that's our performance. What's in the course itself? You can see some of the depth to the course. So we have a lot of stuff, and I built everything myself for this. So we talk about zero DTE Iron Condors, the Iron Butterflies, as well as, let's see, part 2, which is zero DTE calendar spreads. This alone is worth it just so that you can have the tracking sheet and understand how we do that. Also a new section on directional trades and their setups, as well as decision-making. Is it a trend day or a range day? What do you do? How do you judge something like that? So you can not only use that for these type of strategies, but everything else that you trade as well too. And of course, if you sign up for this course, you get 10X Tribe member access. So this is our free community that we offer as well too. And we offer things like this, like trade strategies and alerts will come into the room. Articles that I write will come into the room as well too. So you're joining another community as well. Okay, so let's get back to that. What's that link again? It is ReadySet.trade. ReadySet.trade /mad is for this. So let me just, while I have a minute here, I want to show you what our platform looks like. So this is the free platform. You can see, here's the article today. Hey, join me at the Mad Hedge Fund Traders and Investors Summit. Here's some of the trade alerts that we send out to the free room as well too. Here's an article that I wrote yesterday with a video. And then you can see some of the courses that we have that are part of the platform too, like options on micro E-mini futures, 10 steps to 10X, getting started trading options, simple system to $100 a day, the wheel strategy. So all of this, there's a tremendous amount of depth if you join us and become a member to this. So anyway, that's the platform. You get kind of an idea of what we're looking to accomplish and do. And okay, so yeah, we're not seeing, sorry guys. So anyway, I encourage you to go out to ReadySet.trade and you can surf around the platform. You can kind of see what it looks like yourself. Okay, so is there any questions? I've got about 2 minutes here. If there's any questions, I'd be happy to take them for you. Otherwise, I encourage you to join me and grab this session discount at ReadySet.trade /mad. Would I be subject to PDT rules for trading SPY, Qs, and SPX? Yes. So unless you're trading the futures and the futures options, you'll be subject to PDT rules. Can we get the recording? I don't know that we provide recordings for this, but you can always reach out to me and I can answer any questions that you have.
The answer to that is yes, Doc. We post the recordings of every speaker next week.
Oh, okay. All right. That's a change then, because I didn't
Yeah,
think
it
we did
takes
that.
us about a week to get together 27 hours of video time.
Can I
And
recommend any brokers? Probably, well, Thinkorswim is my primary broker, but I do this on Tastyworks. I also do this on E-Trade, and just about any other option specific broker is fine for this. Okay. Guys, if you have any other questions, please reach out to me. You can reach me, Doc, at ReadySet.trade. I'd be happy to answer any other questions that you have about me or the service or anything like that. Again, what I want to focus your attention on today is the ReadySet.trade/MAD, because this discount for this session will go away by tomorrow. So please act on it. And with that, I want to encourage you guys to stick around for another 5 minutes, because Matt Buckley, I believe, is going to be on next. And he is one of my favorite presenters. He's a great guy. He's a good friend of mine. And make sure you spend some time and listen to Wiz Buckley, who's going to be on here in 5 minutes. So with that, my time is done. John, I yield it back to you. Thank you once again for inviting me to be part of your session.
great. Well, we always love having you on. You always bring tons of insights and experience. And I hope you have a great summer. Have you got any plans coming up?
We're going up to Maine in about a month or so.
Oh,
Heading
that
to
sounds
Hilton
nice.
Head this weekend, Maine in a month, and well, there we go.
I'm going to Ukraine to fight the Russians.
Are you going to be in fixed wing aircraft or what?
No, this is not an air war, it's a ground war. So I'll be on the ground handing out advice, along with the thousands of other Americans who are already there. I mean, this is the summer vacation for a lot of people.
I thought you'd be handing out lead, John.
No, that only happens in the movies. All right. Great to have you, and we'll catch you when on the rebound in September.
Okay, thank you very much, John. Take care, everybody.